The way we all handle our money, it is changing, and dramatically. And I'm not just talking about saving a few bucks here and there. Nope. Something way more fundamental is shifting in the world of finance.
And that really brings us to the core idea we're digging into. Money is getting playful. I know, that sounds a little strange, right? But what it signals is this huge shift in what the financial industry is focusing on. It's moving away from pure utility and towards your overall experience as a user.
Think about it. For years, the promise of fintech was super simple. Hey, we'll save you money. Better rates, lower fees, you know the drill. But now, the whole game has changed. The new question is, how does money feel? How do you experience it? So let's dive in and look at 3 companies that are taking 3 totally different paths to answer that exact question.
All right, first up, let's talk about the entertainer, Robinhood. Their whole philosophy, it seems, is about taking this world of finance, which, let's be honest, can be super intimidating, and turning it into something that feels more like a fast-paced game you'd actually want to play.
So they just held this event called Yes/No. And honestly, it's the perfect signal of this whole strategy. We're talking way less about traditional, buy and hold for 30 years investing, and a whole lot more about these immediate, game-like financial interactions.
And that kind of leads to a pretty direct question you've got to ask yourself, right? Is your investing app turning into a sportsbook? Because that line between the two, it is definitely starting to get blurry.
So what's at the heart of this shift? Well, it's something called prediction markets, and it's actually pretty simple. Think of it like this. You can trade on simple yes or no outcomes. Will this movie be #1 at the box office this weekend? Yes or no? That's it. And Robinhood is taking that idea and applying it to all sorts of events, with sports props and combo trades that feel a whole lot like betting on parlays. And that's not all. On top of that, they're leaning hard into AI. Just imagine getting these super simple AI-powered summaries of your portfolio, or getting a clear, plain English explanation for why the market just did what it did, or even getting some AI-guided help with your next move. It's all about stripping away the complexity.
So the goal here is crystal clear. Robinhood is not asking you to go get an MBA. Nope. Instead, they're trying to make the markets feel familiar, super fast, and, yeah, you guessed it, entertaining.
Okay, so while Robinhood is pouring all this energy into the flash and the sizzle on the front end, other companies are taking a totally different path. They're not worried about the paint job. They're busy rebuilding the entire engine from the inside out.
And that brings us to our second philosophy, which we're calling the engineer, BBVA. Their strategy couldn't be more different. It's not about flashy interfaces at all. It's about rewiring the whole bank with this powerful and mostly invisible AI.
So, BBVA just announced they're doubling down on their partnership with OpenAI. But listen, this is not about just slapping a chatbot on their website and calling it a day. No way. They are embedding these seriously advanced AI tools deep into the core of their banking operations. We're talking about tools for tens of thousands of their employees.
Okay, so what does all this back-end technical rewiring actually mean for you, the customer? Well, it shows up in these subtle but really important ways, like getting faster answers when you have a problem, or getting smarter recommendations that actually make sense for you. And at the end of the day, it just means less time spent waiting around.
The way BBVA sees it, AI is basically becoming like electricity. It's going to be invisible, totally essential, and just everywhere. It's not a feature, it's the fundamental utility that powers everything else.
And that brings us to our third and final approach. This one's maybe the most traditional of the bunch. We're calling this one the adult, NerdWallet. And they just made a move that's all about quiet confidence. It all starts with this one number, $125 million. Now, this isn't some flashy new product launch or a big marketing campaign, but trust me, this number speaks volumes.
So, what is this number? Well, it's the amount of money NerdWallet has now authorized to buy back its own stock. And let me break that down. It basically means they're using their own cash to go out and purchase their own shares, taking them right off the market.
And if you think about it, this is pretty much the financial world's equivalent of a grown-up flex, right? While everyone else is out there chasing hype and making noise, NerdWallet is making this calm, super calculated move that signals something really, really powerful.
See, a buyback like this sends a few really clear signals. First, it tells you that the leadership team believes their own stock is a good investment. It also screams that the business feels stable and durable. But more than anything, it shows they have the confidence to invest in themselves. It's all about showing off a strong foundation.
Okay, so there you have it. 3 very different companies, 3 very different moves. Let's pull it all together now and actually compare these new philosophies of finance side by side.
All right, so here's how it all stacks up. You've got Robinhood all in on the entertainment strategy, making finance feel like a fast-paced game. Then there's BBVA, focused squarely on infrastructure, trying to make banking seamless and totally invisible. And finally, you have NerdWallet, who's betting on confidence, projecting this image of stability and reliability. Each one is a completely different bet on what you, the customer, will value most.
So you've got the game, the engine, and the foundation. 3 totally distinct strategies, right? But at the end of the day, they're all aiming for the exact same thing, to shape the future of how our money feels, how it moves, and ultimately, why it matters to us.
And that leaves us with just one final question, really. In this new world, where finance is becoming all about the experience, the choice is more and more up to you. So which experience will you choose for your money?